good morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Hi, I'm Agam Vakil, and here are the top headlines in this hour. Nifty moves back above 10,200. Traders write the Nifty 10,000 put. And open interest increases in Havells India and Union Bank of India as traders take fresh positions in their respective futures. In Jet Airways snaps 3 days of gains to fall as much as over 4% after its profits fell more than 90% in the second quarter. And SAIL gains as much as 3% in trade after final singing of finalizing about 6,000 crores in joint venture with ArcelorMittal to set up an automotive plant in the country.
Okay, let's take a look as to what's happening in the futures and options market in this Friday. Well, clearly the bulls have taken charge of the market once again and they've pulled the market out of the rocks. Nifty trading very firmly above the 10,200 mark. Until yesterday, you had the technical analysts saying a closing above the 10,200 mark will signal the further up move. So let's see if that gets continued next week or not. The December futures, the premium has actually fallen to 21 points compared to over 30 points, which was seen in yesterday's close. And most importantly, the India Volatility Index, that's cooled off for the second straight session. However, it is still hovering around that mark of over 13.5, but we've seen a good cool off coming from that mark of 15 in the last two sessions. The Bank Nifty is also seeing some sort of strength. Yesterday, a bit of underperformance was seen from Bank Nifty compared to the broader markets as well as Nifty, considering it was the weekly options expiry day. But as you can see, the premium in Bank Nifty futures has also come off from over 100 points to about 70 points, but they are trading above that mark of 25,300. Let's focus in on the options data then. In terms of Nifty, we've seen unwinding coming for call strikes like 10,100 as well as 10,200. And remember, the call writers since yesterday have run for cover, considering there was a lot of writing which was seen in the previous 6 to 7 trading sessions. And we've seen put writing coming back for strikes like 10,100 as well as the 10,200 in today's trade. In terms of Bank Nifty, what sort of range that one can expect in the near term? If you look at the open interest concentration, the range in the near term looks like between 25,000 to about 25,500 on the upside.
Right, well, let's also take a look at some of the stocks which are gaining substantially in terms of open interest in today's day of trade. And as we mentioned, we are looking at Mindtree, Union Bank, both of these counters gaining over 10 to 17%, at least in open interest. Union Bank is looking at fresh shorts for now. Mindtree, on the other hand, is looking at new accumulation of long positions. Voltas, along with Maruti Suzuki and Havells India, also advancing when it comes to their open interest, and along with that, of course, fresh longs building in there. Again, to pull up a list of some stocks which are looking at unwinding. Jet Airways, and this is after we've seen some strength coming in Jet Airways over the previous 2 days. We're looking at longs unwind on the back of poor earnings. HDIL, NIIT Tech, Nestle India and RB Infra also looking at some amount of unwinding when it comes to its open interest. With today's day of trade, I would watch out for how Jet Airways behaves, along with several other counters which have seen substantial increase in open interest.
Well, clearly it's reacting on back of its earnings, which were dismal, as well as it's entered into the F&O ban for today's session. All right, then, before we get our guest on the show, here's a reminder. If you have any queries regarding the futures and options market, you can call us now on 022-4540-4141. You can also write to us on our social media platforms, Twitter and Facebook, with AskBQ hashtag. Let's welcome our F&O experts for the day then. Hemant Thukral of Aditya Birla Money and Navneet Daga of IIFL Wealth joins us on the show. Good morning to both of you, gentlemen, and appreciate you joining us today on Bloomberg Quint. Hemant, let me come to you first. The VIX has cooled off in the last two sessions. Do you see any sort of trend reversal which has come back? Because I remember until few days back, we were talking with VIX at elevated levels. Probably the pullback could be a little difficult.
See, I think basically what we have been discussing, that once VIX comes back below 14, it will give comfort to the bulls. I think that has happened today. VIX has dipped below 14. But importantly, Nifty is also trying to sustain above 10,200. In last discussion when we had, we were of this opinion that 10,030 should hold, because that's the support because of that 10,000 puts. But I was not expecting immediately to cross 10,200, which it has managed to do that. Now, if it sustains above today 10,200, which is looking likely, that means a weekly closing above 10,200 will be taken very well. And with VIX going below 14, I think it's a slight first indication of trend reversals happening. And as I said, if 10,200 holds, I'm looking at a target of 10,350 to 10,330 on index in coming in next week. So I think 10,200 now holds the pivot for us. Till it holds above 10,200, I think that means the trend is changing for the bulls.
Okay, good morning to you, Navneet, as well. Well, how are you viewing trade when it comes to the benchmarks as we move to trade next week?
Well, hi, Agam, good morning. Look, the last conversation that we had a very clear-cut view that the markets are going to go down and volatility is likely to go up. And now, once we have tested the lower lows, somewhere near to 10,050 odd levels, it's looking likely now the some of the comfort zone would be coming because the PCR has moved from 0.8 levels to 0.9. It's looking likely now the moderation or the consolidation in the market would be the course, because we on the lower band the put writers are getting more aggressive, and on the higher side we've got a call writers which we have seen the positions getting strengthened on the higher side of 10,300 and 400 levels. So now I see before the any major breakout or breakdown trend would not be possible from here on. It would be more of a 200 points of consolidation band which likely to happen. I would be a bit cautious on the higher side of 10,300 levels, near to that 250 to 300 levels. That would be my resistance point on the higher side, and not able to sustain above on those levels, 10,250 to 300 levels, would means that again the pressure would be there from most of the markets, and looking likely that again the retest of somewhere near to 10,050 odd levels is possible in the series.
Okay, so once again, the bulls have managed to protect the crucial 10,000 mark. Let's see if this time around this reversal leads us to all-time high levels. Everyone's been watching out for the 10,500 mark on Nifty. Let's shift our focus and talk about the options corner now. And Navneet Daga has a bull call spread on DLF. Before we take a look at his strategy, let's see what it means. A bull call spread is employed when one expects a moderate up move in a security. Well, in this strategy, a call option of a certain strike is purchased and a call option of a higher strike is simultaneously sold. Navneet, over to you. DLF is one counter, which is also a high beta counter, so to say, but the weakness that one saw in the past few sessions, it didn't succumb to that sort of pressure.
So basically, Navneet, this is the logic in my trade that I like to identify the stocks which are holding on into the falling markets, because that shows the gravity in the stocks. And DLF is one of the counter which was even resilient in the falling markets. Now it started to participate when the markets are started to move up. It shows the kind of strong hands are there in the system, and it's looking likely that now the momentum will catch up on the higher side. So the trade idea is basically, since just because you mentioned that it's a high beta stock, I'll go with the bull call spread. The currently is trading at somewhere near to 240 at levels. So I'll be buying at 240 call options and simultaneously selling into 260 call option to reduce my cost. The current spread would be somewhere in the range of 6 to 6.5, and I believe that if the stock moves about 250 odd levels, the spread will widen towards 13 to 14 levels, and that's where I should look to book profit. And simultaneously, I'll keep a very strict stop loss at the levels of somewhere in the range of 3 levels on the spread. If the spread narrows down to 3 or 2.5 to 3 levels, I'll look to exit in that spread.
Okay, Navneet, that's of course Navneet's call on the DLF, the option strategy. But I will take on Hemant and to see if he has a strategy on the Nifty as well. Hemant, how would you play options on the benchmarks?
See, basically I would be going with a long call, because as we just discussed that if market is managing to sustain above 10,200, that means that market will be moving at higher levels. So I would be buying 10,300 call around 88, 89, and a stop loss would be at 68. I think the target of 135 is very much possible, because I am looking at a future target of around 10,350, 10,330, and the stop loss is 10,200. So if it reaches back below 10,200, then I think one should come out of the call around 67, 68 rupees.
Okay, so Hemant is advocating to buy the 10,300 call strike on Nifty, and he has a target in terms of premium between 135 to 140. But I guess Navneet also has a short strangle strategy today on the index Nifty. Let's see what that means. A short strangle is when one sells an out-of-the-money call and an out-of-the-money put in anticipation of decrease in volatility, which we are seeing in today's trade. Well, the strategy becomes profitable when volatility decreases, followed by contraction in options premium. Navneet, over to you. Take us through your strategy on Nifty short strangle that you have.
Look, the kind of a logic that we have on a short strangle is basically now there is now the markets are looking likely that they will stuck in the band because the option writers positions are quite heavy on both the sides. On the lower side, 10,000 put writers have not shaken out. In fact, we have seen some kind of a more addition in the 10,000 put writers. And on the high side, 10,300 and 400 call options are holding pretty decent amount of open interest. It's looking likely unlikely that until we see any major election outcome verdict, we are not likely to see a breakout about that levels. So to my understanding, the market will now basically the kind of gains that it has made, it will likely to consolidate that gains and digest that gain in that breaking band. And I would like to see the volatility increases as well as the time factor come into the play in the option selling. So selling at 10,300 call option and simultaneously selling at 10,100 put options, giving it a inflow of around somewhere near to 170 odd points. I'll keep a target of 100 points on the inflow and keep a stop loss of 195 on the outflow. If the spread widens towards 195, I'll look to exit in this trade.
Okay, so that's the short strangle on the Nifty from Navneet. But with that, we'll take a few very active stock futures in today's day of trade. Now, let's pull up Jet Airways. So we've had its earnings. The its profits fallen by as much as 90%, which is why we've had some weakness. What's gone on in Jet Airways over the past few sessions is that it has moved up. There were a substantial amount of longs building up as far as the system goes. And along with that, in today's day of trade, what we're also witnessing is a decline of as much as 3% in its underlying, and its open interest has also moved down. So it certainly looks like a case of longs unwinding in Jet Airways. Hemant, I wanted to ask you about this particular counter. What kind of trend are you spotting now? Is this the end of the recent up move that we saw, or is this just one of those bouts where there will be some profit taking and we can see a resumption of an up move in Jet Airways? What is your call here?
See, I would not make such a big statement that's end of the upturn, because the stock has given fresh breakouts above 650. And even after this bad numbers, the stock has managed to rebound today from lower levels. So I will be watching it very carefully. Remember, Jet had come in ban yesterday, and we are seeing some unwinding of positions happening. So I will be keeping a close watch on 684. If it manages to cross 684, then I can confirm that the bottom is formed and stock is moving towards 725. Any fall below 660 would mean that the fall will intensify, and one can see 630, 635 levels also. So I would be, currently I think it's in a no trading zone. So either it crosses 680 or goes below 660, then a good trade can come in. But overall, I still feel that we cannot say right now that the uptrend is over for the stock.
Okay, that's the view coming in on Jet Airways, and as Hemant said, the stock is in the F&O band. Let's also pull up Mindtree. Now, that's one stock in the ID space which has been outperforming. In fact, remember, till Wednesday markets were weak, and still, if you look at the returns for this counter this week, it's up almost 7.5%. It's hit its fresh 52-week high in today's trade. Let's just pull up the Mindtree futures and see if there is any sort of OI build-up. 17% OI build-up in just 1 hour of trade. Navneet, are you seeing any sort of fresh breakout on the charts for Mindtree? If yes, any trade that you would recommend our viewers?
Well, there's a clear-cut chart breakout on the higher side, and also the logic is that mid-cap IT has been overall outperforming the markets and the sector itself. And Mindtree is in a very sweet spot. It's looking likely that breakout now confirms that higher targets of above 600 is possible. So those who have bought it can hold it with the trail stop loss of 550, and those who are willing to buy it, and to my understanding, the current market price is also supportive enough to give it the upward momentum, looking at the kind of a build-up that we are seeing. So I'll place my trail stop loss levels or stop loss levels are somewhere near to 550 odd range, and looking for a higher targets and looking possibly the kind of a breakout it has seen and the kind of accumulation. It's looking likely that above 600 possible in the series itself. So one can look to buy into the dips as well as in the current market price.
All right, it's time to address some queries from our viewers. And our first caller is Harsh, and he's calling us from Mumbai. Hi, Harsh, if you can hear us, welcome. Tell us, what would you like to know from our experts?
Yeah, thank you for having me on your show. So my question is that I have a long on Mindtree December futures at 520 rupees. Should I book profits or should I still hold?
Okay, so we have just addressed Mindtree, but considering you have a view and currently trading at 573, Navneet has already addressed Mindtree. If we can get Hemant's opinion on Mindtree as well, it could help Harsh out. Hemant, your view on Mindtree?
See, again, I think it's a mid-cap IT which has been doing fairly good, and Navneet has already mentioned most of the points. I think he should continue to hold. There is no reason to book profits in a stock which is adding OI, making a new 52-week high. So there is no reason, I feel. Yes, he can revise. For me, he can revise the stop loss to 559 and continue to hold. I think the probable next target should be around 605. That's the target that I can see. So another good 6-7% move. So I would recommend him to keep holding with the revised stop loss of 559.
Okay, that's the view on Mindtree. Hemant recommends Harsh to hold on to your position into it, and probably you can trail the stop loss. He's suggesting 559, and he sees a target of almost 605 in the near term for Mindtree. Okay, let's get our next caller then. Ananya is calling us from Kolkata. Hi Ananya, good morning. Thanks a lot for calling us. Tell us what's your query on.
Yeah, I have 10,000 put strike at 85 rupees. Should I cover my position?
Okay, looks like Ananya seems to be in losses. If you could just pull up the 10,000 put strike, 85 is the mark where she entered, and now the premium has fallen down to levels of 48, Navneet. The view that we were getting from both of you, Navneet and Hemant, that markets have seen a short-term reversal. Do you think she should book her losses at these levels, Navneet?
Well, I would say that one should look to book losses in this trade because we are seeing an uptrend, as well as we are seeing the IVs also collapsing on the higher side. So she will be losing both on the delta as well as on the time value and as well as on the Vega side. So it doesn't make sense to carry forward the trade. But however, I'll wait for a closing basis on today's. If we started to maintain about 250 odd levels, and then it surely make a case by at least buy option trade should be closed out in today's session itself. So it's prudent enough to close this trade at this point of time and look for the fresh move on the underlying. If it's giving a signal that it's sustaining about 250, then the chances are that we might see further shrink in this premium in this strategy.
Close your trade for now and evaluate new moves eventually. That's the view coming in for Navneet on that particular position. But we'll move on. We have Umang, who writes to us on YouTube, and he has one lot of Vedanta 270 strike put option at around 6.5 rupees, and he wants to know for how long can he hold this contract. That is the Vedanta 270 put, and it's currently trading at around 2.4. Hemant, if I can come to you on your view on Vedanta, and also perhaps then what he can do with his puts that is at 270.
See, I'll put it this way. First, his put is already out of the money, and that is my main worry. Not that Vedanta I expect it to rush over from any side, but the problem is that Vedanta, if crosses 292, can test 300. And already the stock is at 291, so it is at resistance point, so he can continue to hold the trade but keep a very tight stop loss of 292, 293, because if Vedanta can sustain above 293, then very much it can test 303, and then the put will not be able to fetch any premium at all. So I would just keep a tight stop loss of 293 and ask him to hold the trade for the time being.
Okay, hold the trade for the time being on Vedanta options. That's the view coming in from Hemant. Let's take our next query, which has come on Twitter. Riddhi has written to us. She has one lot of NMDC 135 called strike, which she's purchased at a price of 4 rupees. She wants to know what should be the holding period and also about the loss. That's the 135 strike, and I guess the current premium is somewhere about 3 rupees, and she purchased at 4. Navneet, what do you think she should do? She's also asking if she should keep a stop loss here.
Interestingly, to my understanding, the metals have given a bounce back, but it's looking likely that the bounce back would be much more shaky on the grounds, because overall we were looking at the LME metals charts, and it's looking likely that iron ore as well as aluminium, that has given some kind of a breakdown from the higher side, and it's not likely that we're likely to see a major outperformance from the metals for the Indian metal companies as well. So and she has bought at a strike price of 135, which is a stiff resistance point for NMDC. So not looking likely that it's going to be outperform in a major time. So if we're getting an exit price near to the cost price, I would say that one should look to exit. It's not a stock whereby you see major volatility, so options difficult to trade on the option side. I would say one should look to exit at a current market price, or either one can wait for it. Since today's overall the markets sentiments are quite buoyant, we might get an exit price near to the cost price. But it's a exit for me.
All right, let's move on to trading strategies or trading calls that our experts have for our viewers. Hemant, I'm going to come to you on this one. You have a long on Z Entertainment and a long on Jubilant Foodworks. Can you please take us through those?
Yeah, both the stocks that I have selected are for, one is where I am expecting longs to continue to hold, that is Z Entertainment. I feel the media companies are doing fairly good. We saw yesterday TV18 moving up very sharply. I think Z is one which has seen considerable long positions and I think will build up on the gains. So I'm keeping a stop loss of 571 and I expect a target of 584 here. The second stock that I have selected is more that I expect some short covering coming in. So we have already seen Jubilant Foodworks showing first signs of short covering. I think if this stock continues to hold 1655 zone, you will see more short covering coming in, and the stock has potential then to test 1730 levels, because we have seen some accumulated shorts here. But again, this is a volatile trade, so I've kept a very tight stop loss of 1655. So Z and Jubilant one should attempt on the long side.
Jubilant Foodworks was actually weak yesterday. It was down almost 3%. So as Hemant suggested, it's a short covering trade that he's expecting on this particular counter. Navneet, what about you? Any strategy on any specific stock futures that you have for us?
Look, I got two strategies. One is both from the finance side. One is from a reiterate call on the sell call on L&T Finance. We have seen the good bounce back coming from almost 163 odd levels and to 174. And I'll say that the stock is in a downtrend, and larger short accumulations were there. The higher quantum of rolls on the short side was seen. So on the higher side, the stock is likely to face a lot of resistance. So one can look to sell and the rallies, and it's currently in market price of 174 to 175 range, and place a stop loss of 178 on the higher side. I'm expecting the downtrend again in this stock and touching a levels of 165 to 167. So my initial target would be 167 on the lower side. One should look to book profit in that. The second, in fact, it's a quite divergent trade within the same space. The SRT Finance, that is Shriram Transport Finance, that is seeing a very good amount of build up on the higher side, and it's looking likely that once the 1380 levels has been crossed on the higher side, this stock might see a sudden jump on the because it's trading just near to its fresh 52-week or all-time high. So this stock can be looked into, but it would be a conditional trade. Once it started to trade above 1380, I would look to take a long position on the higher side with a target of 1450 on the higher side and stop loss of 1350.
All right, so those are the views coming in from our experts today, but with that, we're completely out of time on this show. So it's a wrap on this edition of the F&O Show, but there's a lot more lined up. I do want to thank our experts, Navneet as well as Hemant, for taking us through their strategies, as well as solving some of your queries. But we'll have more coming up. Stay tuned in the Bloomberg Quint, and we'll keep bringing you more.